Welcome everyone. Happy New Year. Hope everyone has been having a good time. We sure are. We're looking forward to this year a lot. We got a lot of things coming. So let's jump right in. This is our weekly market outlook for the December 31st through January 4th. My name's Michael. We are ARM Capital. We manage risk in equities, usually through derivatives and also in crypto assets. Want to learn more, you can head on over to our website. All right, let's get a little recap of what kind of went down. Pretty neutral week this week. A little bit to the upside. Better rally, still having a little bit of continuation. Still nothing really changed in the picture though. We're having some political headline risk with Trump saying that there's going to be more trade talks tomorrow, apparently on the 7th, so we're keeping an eye on that. And if it is anything like the last 3 or 4 times he said that, we can expect some more downside. So let's go jump right in. Here's the Dow, up 1.3% this week. Still not even close to the support where it broke. So, this is, we're kind of just watching at this point. You don't want to take a position, you don't want to get burned when it's a low probability trade. So, same thing with SPY. We're not really in the index right now. We're kind of waiting to see if we get back up to that 260 level, or we break down below this 245. We might take some puts on there. QQQ. So this is the one trade that we did have this week. You obviously probably heard about the Apple earnings and the reduced forward guidance for 2019. Saying that their revenue is going to be a lot less than expected, which just caused massive panic in the market, and their stock absolutely tanked. We'll take a little bit of a look at that later. But when we broke this 150 support line, we took some puts. I think there were 147s for the 11th, this Friday actually. Still may see those come into some profit, but Friday did not work out well. Trump tweeted about trade war ending and negotiations coming forward, so we get in a little bit underwater in this position right now. Potential outcomes. This one's really dependent on the trade deal talks. Again, until this thorn in our side is taken out, it's going to keep looming over the markets, and until it's resolved, there's really not a lot of long-term sustainable places to put your money. Kind of take your jabs here and there. Less likely is trade talks continue, market breaks through resistance, and the indices, about $4 $8, about 2 ATRs away from that. So if that does happen, it should probably be later in the week, unless we see some aggressive moves on Monday and Tuesday. The VIX. So this is probably the one case that you have if you're a bull. Volatility has been declining pretty steadily. We did have a nice spike, and you could argue that was high enough for a potential short, medium-term bottom. So we could keep rallying. We're still bearish at this point, although we are watching the VIX as it is approaching that 20 level where we like to flip our bias to being either long or short. We might not be necessarily all long once it goes right below 20, but we're going to be reducing our short exposure until that gets back up above there, and we can rely on that to kind of elevate our premiums that we'll be getting. Sector recap. This is pretty much the exact same thing as last week. I mean, it was the shorter week. You had New Year's off New Year's Day was a half day, I believe, or off, and Christmas was off as well. So we haven't been in the market. We haven't been trading these 2 weeks as volume has been pretty low, and overall we were just planning some other things. But same story as last week. You had the short-term rally. Still doesn't put a dent in their 1-month performances or their year-to-dates. So can't really call it a comeback yet. So we're not. Last week's bullish sectors, we had utilities. Again, this is pretty much the same thing. Utilities, look pretty solid. They're above the 100-day moving average. They got a double bottom here at the 130. So that if you do want to go on the long side, that might be a place you can hide out. Home construction, although we are very bearish on home builders and whole home building market in general, this ETF currently technically is doesn't look in too bad of shape. It looks like a little bit more upside before you hit some trouble. It's only about $1 spread, so we wouldn't be taking this, but we wanted to put it out there just so you guys are all aware. Last week's bearish sectors was tech and materials, and we have tech, materials kind of fell off. You can make an argument for them this week, but we're still right around this 160 level that we would love to just reject off of. So that is what we're looking at with their consumer services, especially in the current market state. You've had those news threats that Americans will be getting their tax returns, or they will be delayed because of the government shutdown and the IRS making that announcement, and that's a lot of money that households rely on. So if we're not having that influx of cash in the beginning of the year, we can see a lot of discretionary spending slow, and people try to tighten up their budgets, and these consumer sectors are a great place to look for downside in those conditions. Telecommunications, we're going to be watching this one. It did break above its 20 and close on a pretty big bullish candle, but we are still below its previous long-term resistance, which has a few points that means that there probably is going to be a nice little battle at that 27 level. So if we go back down to probably like 26.5, we'd be looking to take a short position on telecommunications. Short crypto overview. It's been pretty uneventful weeks in crypto. Volume has been descending the past couple weeks. Price is kind of stable inside the 2350 and 4,000 range. I actually just looked before I started this video, and I believe it's back up at around 4,000. So it's above the near upper edge of their range, and you have this. This is what a volume profile. This is basically how much shares have been traded at that current level. So if we can sustain above that level, it bodes well for us to have some more upside. We're going to keep an eye on it, and we won't probably take a position on it unless it breaches probably 4,100. I think that's maybe 4,300. It's at that level there. So we'll keep an eye on it. Stay tuned for our stock picks alerts for the week. Hope everyone has a great new year, and let's start 2019 off on the right foot. Take care, everyone.